Hello everyone and welcome to CryptoRed, your channel for all the latest crypto news. A lot happened today. ETH is pushing toward $4,700. We've also got a new trend to talk about. Big players launching their own blockchain. Circle, the company behind USDC, is rolling out its own chain. We'll get into that. We'll get also into OKB, a major change in its tokenomics sent the token soaring overnight. We'll talk about Donald Trump, Coinbase, and a lot more. Let's start with the prices. Bitcoin is at $120,000. Ethereum is almost at $4,700, up 9% today. Plenty of altcoins are in the green also today. OKB, we'll come back to this in a moment, is up 100% today, more than 100% today. Solana is having a huge day, more than 15% increase. Dogecoin also, Cardano are all soaring. I want to circle back on ETH because in a way it's pulling the market higher for a while now. Over the last week, ETH is up 29%, one of the strongest moves out there. Chainlink also has done even better, 43% after positive news we discussed yesterday. Now, about ongoing ETH accumulation, a new company named ETHZila, yes, unusual name, whose stock just ripped after announcing that its goal is to buy as much ETH as possible, and also after announcing one of its main investors, Peter Thiel, the legendary Silicon Valley investor and prominent crypto backer, disclosed a 7.5% stake in the company, and the stock tripled. Peter was an early investor in Facebook and awarded Vitalik the Thiel Fellowship well before Ethereum launched. So he's very plugged into the Ethereum ecosystem in a way. He had already taken nearly a 10% stake in BitMine, the number one firm buying ETH, which holds around 1% of the total supply, roughly 1.2 million ETH. ETHZila is still much smaller with about $400 million worth of ETH, and it's still accumulating. There's another interesting data point from Strategic ETH Reserve. More than 8% of the supply is now either in spot ETFs or held by companies, treasury companies, or similar entities that accumulate ETH. The kind of name you see on the list right here. That include also DIOs like Mantle, which has around $500 million. So yeah, it's quite bullish to see 8% for this indicator, and it will keep going up. More good news on the ETH front. There were $500 million of inflows in a single day in the Ethereum's ETF, spot ETFs in the US. It's not a record. We came close to $1 billion a few days ago, but it's still a very strong number, and it tells you investors are still buying ETH aggressively. That's a big part of what's been pushing the price higher, and I think it will continue. Back to BitMine. They've requested to lift their capacity to buy ETH from roughly $5 billion to $20 billion. They still need to raise that capital, of course, but the ambition is clear. The stated target of reaching 5% of the total ETH supply suddenly looks a lot more achievable for BitMine. One more thing people often bring up, the Ethereum Foundation always sells the top. Careful with that. A new article claims a wallet that received funds from the foundation back in 2017 sold more than $12 million worth of it. It's not confirmed that this wallet actually belongs to the foundation. It could be an entity, a developer, we don't know exactly who. Either way, a sale happened. I wouldn't overreact. The foundation sells regularly to fund its mission, grant salaries for developers and all of that. Still, it's a bit funny to see headlines about sales right as it is approaching its all-time high. And yes, let's talk now about Coinbase. Yeah, let's talk about Coinbase. Coinbase Venture has just bought a lot of TON tokens. The Open Network, you know, the token of linked to Telegram. They've bought. We don't know how much. We don't know when, but according to the Telegram Foundation, the Open Network Foundation, they bought some token from Telegram. So it's quite bullish for the Open Network, even though we don't have more information on this sale. Then another major news, Circle, the company behind USDC. We're talking about the market's second largest stablecoin with around 66 billion outstanding. Circle just announced a new blockchain, its own chain, named ARK, the ARK blockchain. That was pretty unexpected. I definitely wasn't anticipating Circle to roll out or even announce a new blockchain like that yesterday, just out of the blue. It's EVM-compatible, so it will run Solidity smart contracts. It's going to be centered around stablecoins, no surprise there, given Circle is behind it. We can already see a few design choices. There will be a kind of built-in exchange at the protocol level. It will even source prices off-chain. Gas fees will be paid in USDC. There will be a default exchange, as I said, inside the blockchain. They are also promising very fast performance. If you look at the grid breakdown from Ignace, the expectation is several thousand transactions per second, at least 3,000 transactions per second with 20 validators. And yes, that means it won't be fully decentralized. In fact, it will be very centralized with a limited validator set. It's a proof of authority system, so only authorized parties can validate the transaction, likely large institutions and similar players or partners. That setup lets you push throughput higher. In theory, they could target 10,000 transactions per second with just 4 validators. By comparison, Solana runs at a few thousand transactions per second, but it's far more decentralized. Circle Hill is openly embracing a very centralized approach. And honestly, that's not entirely illogical because Circle itself is extremely centralized. So the chains mirror that philosophy. Another interesting point, there likely won't be any yield offered on the platform, at least not on USDC to US users because of the restriction that apply to stablecoin issuers offering yield in the United States, the whole Genius Act. Circle shares popped after this announcement because it makes sense. It's another revenue stream for Circle. Here's how I see it. Circle probably looked around and thought launching our own chain is in vogue right now. Down the road, they could even launch a token which could drive higher valuation, whether that's a governance token or something with added utility. So yeah, they might launch something later. And alternatively, they can keep just adding utility to USDC, but building a chain specifically for USDC is going to be tricky, in my view. Even USDT-specific chains like Plasma, I believe, will have some issues because they're going to face a lot of challenges. In a way, they're just rebuilding banks. We used to have extremely centralized entities in traditional finance. Now in crypto, we have centralized entities that deliver a product clearly superior to decentralized alternatives. I'm talking about stablecoin like USDC and USDC. They have stability that no decentralized stablecoin has matched so far. They've built in a very good centralized product, and now they're moving towards centralized blockchains. The real question is whether user will actually migrate to that kind of chain. I don't think we'll see a massive shift. I don't see these chains overtaking Solana or Ethereum when it comes to smart contracts and DeFi application. Where it does make sense is payments. Pure money transfer built around stablecoins. I can imagine a lot of exchanges integrating with a chain like this to offer fee-free deposits and withdrawal. That's a clear user utility right here. But flourishing DeFi ecosystem on top of this kind of projects, I'm really skeptical. Personally, I believe more in Base-style blockchain tied to centralized entity, yes, but taking a more decentralized stance in practice by remaining a layer 2. You can still deploy what you want on that chain, even if they're just a single sequencer at the moment, but I think that approach is better overall, and there's also some value accrual to ETH, and as a fan of ETH, I kind of like that. This trend, Circle launching its own chain, and Stripe too, which I mentioned yesterday, announcing a blockchain specialized in payments, make you think hard about the future of blockchains, the future of layer 2s, and the futures of Solana as well. I even saw an article asking whether big companies launching their own chain is bad for Solana or for Ethereum. It's certainly not great for Ethereum's original vision. The vision was many layer 2s built on top of Ethereum, not a bunch of parallel standalone chains competing alongside it. That's more the vision of Chainlink to help different chains communicate between each other. Here's how I say. Here's what I think. I think it's not great for Ether, as I said, but it's not great either for Solana, because Solana's whole vision is a high-performance blockchain that can capture a lot of different use cases and attract institutional players. That's not what we're seeing here. Circle and Stripe, and even Robinhood and others are choosing to not build on Solana. Robinhood, eToro chose to build on Ethereum as a layer 2s, but others choose their own blockchain. So nothing gained by Solana there. Even for Ethereum, as I said, the original vision of having lots of different chains cooperating, and so Just watched an interview with Vitalik on Bankless a few days ago, and where he basically said that it's safer for assets like USDC and USDT to be minted on the main chain on Ethereum rather than on an alternative blockchain. From a security standpoint, that makes sense. So because he mentioned some issues some blockchain had in the past, like Ripple, and which the first week of history of the Ripple ledger is lost forever. This can't happen on Ethereum. So yeah, we're getting now public blockchains that are effectively owned by companies with a lot of centralization backed in. In the end, the market will decide. If users adopt these products and actually do things on them, then that means there was real demand and those teams were right to launch a chain. If not, it won't work. My view is that we won't see massive usage, as I said, on those kind of chains, and they won't end up competing with major public networks like Ethereum and Solana. I think the centralization aspect is going to scare people. That said, we shouldn't throw the baby out with the bathwater, as they say. This is bad because it's centralized, therefore all blockchains such as this launched by a centralized player are bad. If you're using USDC on Ethereum, it's the same centralization trade-off as using USDC on one of these blockchains. Circle, as the central issuer, can freeze or block USDC transfers. If what you want is real decentralization, then choose decentralized assets like Ether, Solana, liquidity token like Bolt, which is a stablecoin, Bolt, or others. That's where you get genuine decentralization and no associated censorship risks. Anyway, it's a new trend, big entity launching their own blockchain, and in one sense, great if they're public, anyone can use them. I just would have preferred to see this built on existing public chains, even if that's Solana or Avalanche or something like this, other public blockchain. I think that would be better for users. Another piece of news I didn't mention earlier, Scott Bessent. He's in charge of the Department of Treasury in the United States. He's calling on the Fed to cut rates by 0.5% by September. So the market consensus is more like 0.25%, but he's calling for a larger cut. If we do get a bigger cut, to me, that's extremely bullish. It will be very good news for crypto, for equities, and for risk assets in general. So let's hope that happens. Next, a token that literally exploded in a day. OKX token, OKB, which jumped more than 100%. We moved from around $46 to more than $100, basically 2x. What happened? OKX announced a major change in OKB tokenomics. They're capping total supply to 21 million and burning 65 million tokens, destroying tokens they had accumulated before. You almost never see that. More importantly, they're removing the mint and burn function from the smart contract, which means that you can't just mint new tokens later, unlike what we saw with Crypto.com with the Crow. The only thing they didn't clarify is whether they also remove the rights to add or upgrade the smart contracts in the future. If they can still upgrade it to reintroduce features later, that's not great. But overall, this is positive news for the token. It pumped hard, and OKB holder are probably very happy right now. Then, a quick word on Bitcoin. There's a platform called Odin.fun. It's basically a meme coin launchpad for Woon Styles tokens on Bitcoin that just got hacked for $7 million. Obviously, Bitcoin doesn't have smart contract the way Ethereum or Solana have. So they built a sort of layer 2, the parallel chains, something they called Valhalla, apparently using ICP, their internet computer, and they still got hit for $7 million. Odin.fun treasury won't be able to fill that hole. The exploit, as far as I understand it, involved price manipulation. They provided token with very low liquidity and pumped the price artificially, and then withdrew the bitcoins against the inflated value. Unfortunately, we're now seeing hacks in ecosystem beyond Ethereum, beyond Solana. Even on Bitcoin, you can get this kind of exploit once you start adding layers and bridge and smart contracts. We saw Blockstream trying to launch a new programming language that's supposedly less vulnerable to all this stuff, but it's far from being adapted. But it just goes to show almost everything is hackable. When we talk about smart contracts, there really isn't a project that's completely unhackable. Next up, Donald Trump. Donald Trump reports says, according to Cointelegraph, that he's made $2.4 billion from crypto since 2022. How did he make that much? There's an article explaining this. A lot was made with the Trump meme coin, almost $400 million. There was also Trump media, which start to accumulate cryptocurrency. He said to have made about $1.3 billion thanks to several investments. World Liberty Financial also almost $400 million, with also something called American Bitcoin, a Bitcoin mining company, more than $10 million. So yeah, he made a lot of money with cryptocurrency. It's not exactly surprising, but it doesn't seem to be causing much outrage in the media, because he pushed pro-crypto legislation hard, and then he benefited financially from crypto. But yeah, I'm not going to complain given where prices are right now. This is pretty much what many expected after Donald Trump's election, and I was expecting a kind of bull run, and that's what we're watching right now. Well, that's over. That's what I wanted to cover today across the different crypto stories. I hope you enjoyed this video, and if you like it, please subscribe, like, and comment, and see you tomorrow for another video. Bye bye.